we have our Priceline trader, Nic Chahine,
Hello.
hopping in, and we were just talking how Canada's positive on Priceline, but we know who the best trader in Priceline is. It's Nic Chahine, and let's get his thoughts on PCLN.
Hey, folks.
How's it
Hey,
going?
hey, Nick, how was your long weekend? Nic Chahine here, options expert. He joins the show every Tuesday to discuss this week's options outlook. We were just talking about Priceline here. Is that giving you a chance to get in, Nick, or has it been a little elusive?
If you wanted to get in, you wanted to get in around 11:50, not up here. My fear is not Priceline itself, but the fact that we're bouncing on the fact that the world didn't fall apart over the long weekend. I don't think we learned anything new today that we didn't know last week or the week before that when we crashed. So yes, it is a flash crash. I agree with you, by the way. And so what am I chasing at 1275? The fact that one company's opinion said, okay, it is, things are not as bad and things may be looking on the upside of targets. Technically, I can see it bounce even a lot more than what it's bouncing today. So even, dare I say, in the 1300s, but I can't put a lot of money into it. If I wanted to play anything on the long side or catch any breakouts from here, I would rather do it via cheap calls or call spread. I don't know if there's anything cheap with the VIX being up so high, so it's a relative term. But technically, okay, yes, it can bounce if it can break the 1275 and hold it. But fundamentally, I still think it's a good company, but the whole market fundamentally is still on the same footing it was on last week and the week before that, which is very iffy footing.
So you sound like you might be a little bit of a fader of this rally today.
Well, not so much as a fader, but I can't admit. Here's the thing: a lot of people are caught wrong in this market with the drops. So any rallies like this, I think it are better played from the standpoint of fix whatever has been broken. Take this chance to fix any trades that were under pressure, and buy some insurance just in case those who are expecting a lot more from here, like another 10, 15% drop from here, are right. If they're right, then you're ready. If they're wrong, so you missed out on a couple of upside targets, upside dollars. So I'd rather take that route than to say, okay, this is it. We're bouncing up, up, and away. If you've noticed, we've lost a lot of hopium reasons to run. And usually, that's why the buy the dippers come in, because they have hopium that this will happen and that will happen and this will happen and this won't happen. Well, now we don't have anything. The only thing we're hoping is that they don't raise rates in September. And maybe if Yellen comes out and says we're not only not raising in September, we're going to forget about it this year and forget about it until, maybe she doesn't say this year, she says until global markets settle down or something like that. Then we'll say, okay, as long as China's in trouble, we're good. Run, run, run. So that is probably the only source of hopium that I see coming. But other than that, the data from Europe is hit and miss, and the data from China is not good. Japan is still what it is. So the givens, I keep telling you that fundamentally nothing has changed in my thesis, my global thesis. We know that we're okay in the U.S. We know that Japan is tired. We know that everything is still the same. And add to it Greece on September 20th elections, and there's a lot to be feared.
What about individual stocks here, Nick? As we have been chopping around here, I know you're out there probably writing premium, on the rips and writing premium on the dips. What stocks are you looking at here, and which ones are you collecting some premium on right now?
On weakness, I've collected some premium on Apple because if they're going to hang on to anything, it's probably after the initial sell-off. Is probably Apple. I'm not going to put any premium, any faith in any frothy names or perceived froth. I'm not going to call them all froth, so don't be sending hate mail. So if I say Tesla and Netflix, and they have a lot of froth. By that I mean markets are buying stories down the line. Growth in Netflix, which is legitimate, but it's still something to come as opposed to something in the bank right now. And Twitter and Tesla and GoPro and Chipotle. So these are perceived froth. And Priceline is bunched in there, not because it is froth, because it's a momentum stock. And they tend to move in unison. More importantly, I think the biggest risk on the NASDAQ are the biotech / healthcare stocks, because they're collectively as big as Apple influence on the market. And they've been running to all-time highs or records of speed based on a lot of deals. So I'm asking how many of those deals are based on share price, and how are the new share prices level affecting those deals? Are they going to stick? So what if we get news of a deal getting canceled for some reason? Is that going to create panic in there? Even though they've fallen from highs, there's still a lot to fall because they climbed so high, so fast. So there is a lot to worry about, but I'm not going to tell you we're going to zero. I'm telling you, get ready with your portfolio and have some patience, even at the expense of missing a few upside dollars.
We got DC1 in the chat. Regeneron here. We're talking biotechs. I don't think I've ever heard you mention this one on the show, but could you just give us a quick technical look here, Regeneron? It looks like it's trying to regenerate a rally here. It's find some support, but one thing bothers me about this one a little bit is that, boy, we're still pretty close to the lows from the meltdown.
Yeah, Regeneron has been in an up channel. If you look on a one-year chart, you can see that just about 12 months ago, under 12 months ago, it was in the 300s, and here we are in the 500s. That's one of those perfect situations I'm mentioning. People say, "Oh, it's $500 or $475. There's no way it's going to get to 300." Well, look to the left a little bit. It was in the 300s just 10 months, 11 months ago. So nothing is impossible. The fact that it's putting in lower highs is not good, and for the last 5 or 6 days, higher lows. So now that tells me that I don't know what it is pre-market. You want to shoot a number at me? Tell me where it is.
Yeah, let me take a look at REGN here. RGN is trading in the pre-market, up $13 here at 513 even. Pre-market high right there, 513.
Okay, so now I have lower highs, higher lows coming into a point around here. So if it can maintain this upside of 513, then it has a chance to try to recover the bottom of the ascending trend. So 525 to 530, I'm eyeballing it from here, would be the next level to see if it can get there, because it wants to regain that line and try to get back into that ascending channel. Otherwise, will that line become resistance, and then it'll bounce down off of it and then try to recover a little higher a little later. So, but there should be a move coming, and the direction's unknown until obviously this pre-open here. I'm not one to chase it, but I don't know it's news. I'm just looking at the stock, so I don't chase it. I don't look at it fundamentally.
Okay.
But if it does lose 475, I think there'd be a lot lower to go, technically speaking.
Yeah,
Nick, what are your thoughts here? We were covering the FANG, the Facebook, Netflix, or Facebook, Amazon, Netflix, Google here this morning. We just did a little quick technical on this. What are your thoughts here on these stocks, and just overall, what are your thoughts here on growth versus value stocks in this market? Are we now moving to a market where the investor is going to be a little more cautious? Maybe they're going to start to look, more at value over growth, or is this just a blip here, and eventually they're going to jump back into the Facebooks and the Amazons and the Netflix and the Googles, and these stocks are all going to be making new highs?
Well, you're kind of like confusing me with this, because a lot of them are growth and value in there. So, like Facebook is.
I'm comparing, but if you look at Facebook and you compare it to like a Procter and Gamble or your traditional, that's what I'm comparing it to. So obviously these stocks have growth, but there is some more value maybe in Facebook compared to a Netflix, for instance. So
yes. I agree with you, but the fact that we're going to buy the balance and go to all-time highs, I can't get behind that idea just yet, because everything that brought us down to this mega fear is still here. And I was really surprised to see that after the flash crash, they bought those momentum stocks back up. So I thought to myself, fear is not here. They're not scared yet. The bulls are not scared yet. If they were, they wouldn't be buying 4% up the next day after a flash crash perceived froth. Maybe they'd buy Apple. But then you see Apple drop 4.5% one day, bounce 4.3% the next day. That's obviously not based on its ability to generate money. It's based on somebody probably liquidating to cover losses somewhere else. So the markets are connected. We're not trading in this stock bubble. But yes, they can buy these guys up, the FANGs, but I don't think Procter and Gamble has a better chance of holding up than Facebook, for example. And if Procter and Gamble is falling fast, so is Facebook. So, like you said earlier, you said we're trading all the same, everything the same, everything up, everything down. That's probably a byproduct of sentiment and headline trading. Fundamentals have taken a back seat, and during sentiment and headline trading, my style of trading is really dangerous because credit spreads, you want the nothing to happen, and this is the exact opposite of nothing. And what creates it is sentiment. So for a minute, like on Draghi's last week when he came out with a statement and he said something and everybody misread it. He said we're switching from 25 to 33%. Everybody's like, whoa, increasing. He wasn't. He was saying we switched the mix we're buying, not the amount we're buying. And then the market ran. That's just sentiment trading on a headline, but incorrect sentiment trading because they misinterpreted the headline. So fundamentals have taken a back seat. That's why everything is kind of moving together. That's why one day we're down 30 points, the next day we're up 30 points. I can't chase it.
When do you think this volatility leaves this market? Because it's crazy to think that we're moving 300-400 Dow points every single day. Sometimes, on Friday, losing 300-400 points and bouncing all the way back here this morning. What's it going to take to get rid of this volatility?
If I remember correctly, last time we had issues like that, closer
Ebola.
to 08, I should say.
It wasn't
even before
bad,
Ebola.
Yeah. True,
yeah, even before Ebola, when we had real corrections. But after 08 through 11, we've had a few of those, and every time, for a couple of weeks, we would have these mega swings. It's like a pendulum swinging, and it just takes a little bit to settle down as long as you don't give it another push. Well, we have a couple potential pushes coming. And if they don't come, then that's great. One is the Fed. I was convinced months ago that they should raise it in September. And I said that they would probably wait until December, which would be wrong because there's nobody to defend the market in December. Everybody's, quote, on vacation. But now the environment has changed, so I'm thinking maybe they shouldn't add fuel to the fire. And not because I don't think they should raise, just because everybody doesn't want them to raise and they're going to cause a conniption. So that's one possible push coming. And the other one are the elections in Greece. And of course, Chinese markets are still, or the China environment is still a shoe looming. So if these three don't cause another push, then maybe we can settle down a little bit and start trading some fundamentals again.
Nic, let's just move on to Netflix here. We talked about it a little bit. Dennis and I did the technicals here. Some competition coming from Apple. I know this is one you sometimes do lotto trades in as far as, not really doing the spreads, but trying to pick one direction or another. Boy, pretty close to that low that we had a few weeks back here. Not really getting a bounce. What's your take on Netflix?
Yes, I have not made any trades in Netflix just because it is a momentum, and I am a fundamental trader, and I can't lay credit risk in front of price movements like that. Technically, I tweeted actually that it could be heading to the low 90s if it loses. I forgot the level, but it was I think around 103ish, and I think a few other technical analysts out there. Not that I am one, but a few of them that I respect have said, okay, yeah, it's going to bounce a little bit, but then head down to lower prices. And it got close to the low 90s last week, but I think free market is bouncing here. So I'm not chasing it, and I would be looking at the 103 to 105 area to see how it behaves there, because it has set lower highs. And if you connect the dots of the recent lower highs, you'll come up with a line that crosses about there. And so if it breaks it emphatically, then it has a chance to bounce back up, maybe retest the 115 to see how it behaves there. But if it comes back down and loses that 103 area one more time, it still could be destined, technically speaking, to the low 90s if the environment breaks apart too. If the markets fall, it's vulnerable. If the markets bounce, it's not going to fall on its own.
Okay. All right.
Nic,
Go ahead,
I was
Gus.
just going to say one last stock before we let you go. We haven't talked about it yet here this morning, but Twitter. Twitter is one that's actually really been tight here the last few days. It's not as volatile as it has been in the past, and it's kind of holding up well. I actually don't mind this chart of Twitter. Considering the big fall we had on Friday, Twitter held up. Now it's bouncing back a little bit here this morning. Again, this looks like it's still trying to form some support here, and I wonder, all the Twitter bears, are not hearing too much from them here anymore, and I wonder if Twitter isn't forming a little base to attack that 30 level again.
I agree with you. I noticed that one day Twitter was down like 2%, and then it flipped around and closed up higher, like 1.5, maybe 2%. And then from there on, every drop was bought, and I think it closed green every day until, except for 2 candles since then. So it may have found a bottom around the 23, 24 area, not the flash crash number, because that was, whatever it was, but a little higher. There were a couple of days where it showed red and then flipped without the market having flipped. And it was like based on Twitter only action. And going long, I did go long it via very conservative long distance December credit put spreads, just to say I've done something at the lows as opposed to being the moron who missed everything,
Nick, we can never categorize that. A very consistent outlook on the market as strategies. Nic Chahine, option expert, joins the show every Tuesday to discuss this week's options outlook. He's also a Marketfy Maven and the author of Create Income with Option Spreads. So if you like what you're hearing from Nick, you could definitely get some more of that on his Marketfy product. Nick, thanks a lot here to get us started out for the week, and we'll talk to you again next Tuesday.
Looking forward to it. Thank you.
Thanks, Nick.